We start the Fed week off with a rally. The Dow was up 49 points. The S&P was up almost 31 points, up 0.47%. The Dow was pretty much flat, up 11% there. NASDAQ was up almost 1%, NASDAQ composite. The Russell was up 0.35%. The VIX was up 6.30%. The Fed this week, we have options expiration. It's likely going to be a sell the news event. The market forming multiple point negative divergences, S&P and NASDAQ at key resistance levels. Coin is rallied into resistance, forming a bear flag. Likely going to see sell the news event with the Fed. It's already priced into the market. The rate cut will probably end up rattling markets in that we get a hawkish cut out of the Fed, still take this wait and see stance, or it's not enough. They're not making a commitment going forward. Likely to see markets sell off at this event after going sideways in the summer and now on into September here, drifting slightly higher. NASDAQ has a triple divergence, S&P has a quadruple negative divergence, and we're getting warning signs. Bitcoin as it rallies, forming a bear flag into the 117,000 resistance level. I just made a Bitcoin video. I'll link it at the end of this one. This week, the Fed announcement and press conference, there's a 95.9% chance of a quarter point cut, 4.1% of a half a point, 0% chance of no cut at all. And again, got these massive negative divergences. We're getting the rally to start the week off ahead of the Fed. This looks like a classic sell the news event. Rate cut is already priced in to the market. With options expiration, again, this week, I think you're going to see a sell the news event with this. Signals remain bullish. S&P signals have been consistently bullish through the entire advance. Signals remain bullish on the S&P. Now they've turned back to bullish on the NASDAQ. And again, they've been consistently bullish since the bottom. Saw signals turn bearish briefly after the July peak. Some signals turned bearish in August. Here we didn't turn bearish. We're likely going to see a Fed rate cut that ends up being a sell the news event that will flip signals back to bearish, that will give us bigger correction than what we've seen so far, and then the final climax rally, which this whole thing is the final phase of the blow off top. Still think we go much higher, but we're going to see a reset, a big rally up to the July high. Seasonality didn't kick in, and we went sideways, slightly drifting higher, forming a quadruple negative divergence. And again, we had a divergence, triple divergence back over here. The conventional wisdom is now we're going to get this massive rally that the Fed's going to cut. And again, the opposite is likely going to happen because we have now formed quadruple negative divergence on the S&P, on the RSI in the daily time frame. Triple negative divergence on the RSI, on the NASDAQ. Both above their upper Bollinger Bands. We'll likely see a close back below those bands, either ahead of the Fed, with the Fed, or shortly after the Fed, but you're likely going to see rejection at those upper Bollinger Bands. The S&P's got a quadruple negative divergence on it. NASDAQ's got a triple negative divergence on it. They're both back above the upper Bollinger Bands and slamming into resistance. If NASDAQ did go higher, that rising trend line comes into play in the weekly time frame. S&P slightly overthrowing it, but signals have been consistently bullish for the NASDAQ until July. July peak, we started to see them turn bearish. They reverted back to bullish. Then they started to turn back to bearish in August. They're back to bullish, selling off 4.28%. Likely going to get a bigger sell-off. Signals remain bullish, but we'll likely see a sell the news event with the Fed and see the triple and quadruple negative divergences play out there with NASDAQ and S&P 500. You got JP Morgan, you've got Morgan Stanley, both saying the same thing. I'm telling you, hitting new highs right ahead of the Fed meeting. The rate cut's already priced into the market. It's a dovish event. Again, get a hawkish cut. Markets are ignoring the warning signs with indicators being extremely, when the market is extremely overbought. Bitcoin's likely going to go back and test 100,000, 101, 102, 103,000, something like that to test the support at 98,000. Warning signs right now on Bitcoin at resistance, making a lower high and a counter trend. the markets are likely going to follow Bitcoin, which has already peaked back on August 14th. We have triple negative divergence on NASDAQ, quadruple negative divergence on the S&P 500. Morgan Stanley analyst also saying, again, it's likely going to be a sell the news event. That's what I've been telling you, as S&P is just slamming into resistance, drifting slightly higher each week over the summer, forming quadruple negative divergence, the strongest sell signal in technical analysis. Bear flat right into key resistance just above our 50-period moving average at the 117,000 area. Already formed a double top into major resistance in the weekly time frame that measures down to the 100,000 area. It's likely going back to the 200-period moving average, currently at 102,600. Be around 103, 104,000 by the time we reach it. Could even overthrow it. We're likely going back to test 98,000. Watch my Bitcoin video. I'll link it at the end of this one. Again, Bitcoin's likely going to continue to decline. The market is likely going to follow Bitcoin. Bitcoin's triple negative divergence up here gave us the August peak. We now have a triple negative divergence on the NASDAQ, quadruple negative divergence on the S&P 500. NASDAQ's forming triple negative divergence still above the upper band. We gapped higher, up 0.94%. Again, we're likely going to see a close below the upper band here this week surrounding the Fed meeting. We have options expiration this week, forming a massive divergence on the RSI and on the MACD, the oscillator. Zoom out, you can see the negative divergence on the RSI much easier. We had a divergence back over here at the beginning of this broadening formation that ended up giving us the big sell-off that began at that one. We had a divergence right here in February that gave us another sell-off with this broadening formation, took us to a new low, and you have another divergence here. I think you're going to sell off likely back towards this level here, maybe the 200 if we get something bigger, the horizontal support, and then I think you're going to go up, get the final climax high. But again, we're likely going to see a sell the news event. We had a massive move higher off of the April low, and then these sell-offs in July and August, and then just drifting higher each time out of the trading range. Right now we've moved above the trading range. We have the trend line right here. Again, if we fail to reach it here, we're likely going to reach it later on in the coming months ahead. I think NVIDIA and the NASDAQ both have these broadening formations that will eventually give us a top in the next few months. I expect that we're going to see a sell-off and then a rally to new highs. S&P's overthrowing the trend line from the previous highs ever so slightly. Again, you still have a quadruple negative divergence, which is the strongest sell signal in technical analysis, a quadruple and triple and quadruple negative divergences. We are back above that upper Bollinger Band. Again, we tried to rest right on it there to close out last week, barely closing above it. We're still holding above it. Watch for a close back below it, which is what we've seen with these previous sell-offs here from the July peak and then over here in August. These massive negative divergences forming here in the daily time frame. So it's likely going to be sell the news event with the Fed cut because it's already priced in. We're not going to get jumbo cuts this time from the Fed, but later on we will. The Fed does a one and done, and then they go back to their wait and see mode and sit on the sidelines. Again, eventually the market will go up, rally up in anticipation of the rate cuts, and eventually at some point there's going to be a crash, maybe Jamie Dimon's crack in the bond market. Coming months ahead, we're going to see a catalyst or a couple of different catalysts produce a top that will eventually give us a bigger crash than what we had from the sell-off earlier in the year from the February high down to the April low. Lower today again. NVIDIA and Bitcoin have already peaked. The market's going to follow them lower. NVIDIA is likely going to get another leg down with Bitcoin towards their 200-period moving averages. I don't know if NASDAQ and S&P make it all the way down there because they have the horizontal support levels at the February highs that we might find support there. But again, NVIDIA likely going to get another dump. Off major resistance. We have this broadening formation. NASDAQ's forming the same thing. It did not move to new highs. Today, the NASDAQ 100 is diverging, just like they did back over here. NVIDIA got a lower high in July of 2024. The NASDAQ made a higher high. They diverged, and again, we got the dump. Same thing over here. Didn't make a new high in February. NASDAQ did. And again, we got the dump. We're doing the same thing. We're not making a new high. NASDAQ is. Again, you're likely going to get the dump. And I believe that it'll be wave 4 here. I believe we're in wave 4 for NVIDIA. And then I think you get one more push higher going into the end of the year. Maybe because we went sideways for so long, maybe it drags out into the beginning of the year. In the coming months ahead, I think you're going to see a top in the market. And I think the broadening formations on NVIDIA and NASDAQ are likely going to give us one more pump higher after a sell-off here in September. The seasonality, September sell-off is still likely to play out. It is with NVIDIA and with Bitcoin. They both already peaked in August. NVIDIA early August, Bitcoin mid-August. Market is likely, the traditional markets are likely going to follow them. S&P, again, has what looks to be an ending diagonal with the multiple point divergences that are forming a quadruple negative divergence and a larger one on the MACD. This is the area I'll be watching if we begin to sell off the 100 period moving average here, the lower end of the cloud. Again, by the time we reach that, we could be at higher levels with the 100 period. The 200 could be closer to this level. This is a level of interest. And then below that, the 200 period moving average. If we take out this level and the 200 is not up here by then, you want to be watching that 200 period moving average. But again, we're going to get a reset before going higher and then go much higher, top at some point in the coming months ahead. Same thing here I talked about with NASDAQ. Again, this February peak is a horizontal support level. If we take out our 50 period moving average, each time since the July 31st peak that we've come up to extremes on the stochastic, we've seen a sell-off. Here at the July 31st peak, we saw it, the rollover just ahead of that, and then with these other rollovers, we've seen the peaks on the S&P 500 in mid-August, late August. You're likely going to see it now here in mid-September. The S&P was up today, but so was the VIX. And the VIX came up right up to the 50-period moving average. Again, look at what's going on here. You got this bullish divergence. Now you've got a higher low that is set up on the VIX. Well, the S&P has gone up and made a higher high. The S&P up here, it's gone up and made a higher high, and there's a discrepancy. So again, the VIX is not moving to new lows, and this often happens at turning points. We're seeing the MACD right here under the center line with multiple point bullish diversions. Now a potential confirmation of a higher low. You end up getting a breakout of the downward trend line right here, and we've stalled at it right there. You end up getting a breakout here this week with the Fed or ahead of the Fed or just after the Fed. Again, be watching for a push above the 50 period and above the 200 period. Volatility likely going to increase sharply as we get a sell the news event with the Fed. You have this compression pattern here, this bullish falling wedge here, and it's tightening up with the Bollinger Bands. It's telling you something big's going to happen. We've had the compression pattern, the tight Bollinger Bands, but we've just gotten sell-offs in July and August, and it's likely this is building to something bigger now, and you're likely going to see a sell the news event with the Fed. You got the stochastic trying to recycle back up now. The MACD under the center line, and the RSI is just inching up over the 50 level. The MACD tried to roll over. Here it is up close. Turned back down, turned back up, and ticked higher. Again, you're right under the center line here. Again, if you can get above 50, you can get above the center line on the MACD, then volatility should sharply return. You've got the 10 above the 20 period moving average, and now we rally back up to the 50 period. Do we break out immediately, pull back a little bit and break out? We'll see what happens. But again, I expect that we're going to see this bullish falling wedge break out likely this week. You got a compression pattern is building and building and building, and then boom, volatility comes back in a massive way. And again, you get your rug pull. Here you can see the RSI ticking above 50. Again, if it can hold above 50, get above the 50 period moving average, you have a 50-50 bullish signal here in the daily time frame. Topping tail with our last sell-off, it's just stalled at that 200. It's given us a pullback to fill the gap. P's got a new high, so VIX has not got a new lows, and we're likely now building momentum to break out of the bullish falling wedge. So I think it's the rate cut's already priced in. We've rallied ahead of the Fed. It's going to be a sell the news event. S&P is overthrowing the trend line from the 2023 low. It's probably not going to be able to close above it on a weekly basis by the end of the week, and you'll probably come back and break the trend line here if we get a sell the news event with the Fed. Talked about the blue trend line and the red trend line. If we get rejection with this overthrow right here, which we've overthrown it before, especially the 2022 trend line. This one's from the 2023 low. We have another trend line with the log scaling. Again, watch to see if we come back and break this trend line, which is very likely if we get rejection here at this level at the upper Bollinger Band, and with the quadruple negative diversions, you're probably going to get a pretty ugly sell-off. Signals, as I talked about, remain bullish, but you have these negative divergences that have formed as we rallied into the July high, and now we have these multiple point divergences with these peaks that have formed here, likely give us a bigger sell-off before going and making new highs. Now, S&P's overthrown the trend line from the 22 high. I did not include the shadow. If you include it, we're up at that area right now. I just connected it to the December peak and excluded the shadow. But so we're still hitting that area if we include the shadow there from the 2022 high. The S&P is above this trend line. It's likely going back to the 20 or the 50 not seen here. So log scaling. Here's the 2023 trend line on the weekly chart. The 2023 trend line, we're just slightly overthrowing that level after slamming into it. And again, you're probably moving back to the 20 or the 50 period moving average here in the weekly time frame for the S&P 500 before going higher. I think you'll end up reaching the red trend line or the dotted blue one right here from these lows, excluding the shadow, and including the shadow. We'll likely see a sell-off and then one final rally to new highs. Divergences that had formed on the intraday charts last week just gave us a pullback. We got a larger divergence out of it. In order to have a sell-off, you got to take out the 200 period here in the 5-minute time frame. We gapped higher, and then we closed above that upper Bollinger Band. So we're still consecutive closes above it. We're just right at it there on Friday. So we'll be watching to see if we close back below that upper Bollinger Band, either ahead of the Fed, with the Fed, or after the Fed. We had a trend line. I connected this peak here with this peak here, and we overthrew that level. We overthrew that trend line, forming a rising wedge. We now have another trend line. I've connected this peak here with today's high. Again, it's forming multiple point negative divergence here in the 15-minute time frame. The rising wedge is likely to play out here, likely have a larger ending diagonal on the 60-minute chart, but you've got this multiple point divergence. We'll see if we try to hit this upper boundary yet again, or is that all she wrote? You got to take out the 50 here. You got to take out the 50 here and the 200 on the daily chart if we're going to sell off. This trend line is now resistance. Sell off, you got to take out the trend line, the rising trend line, and then you have to take out the cloud right there and our 50 period moving average here in the 15-minute time frame for it to see the divergences begin to play out there on the RSI. Today's high gave us another divergence point here on the RSI in the 60-minute time frame. You likely have an ending diagonal, and in order to sell off, you got to take out the 200 period. You got to take out the 50 period, and then the 50's got to cross below the 200. Same thing in the daily. You got to take out the 10 and 20 period and then drop below both of them if we're going to see a sell-off.